Hello everyone, welcome back to All Financial Discussion channel. For this video is actually a continued discussion on my previous video. So basically this video, I'm going to explain what to do when actually Fed cut the interest rate. What will be the impact on the different asset class. On my previous discussion, I have discussed on the stock and also on the bonds. Now I'm going to discuss on the cash and saving, crypto investment, real estate, okay, on the physical real estate and also on the REITs and also others like gold. So basically all this will be the objective of this video. Guys, before I continue, I'd like to urge you guys to help me by like this video. Guys, it's just a few seconds. Press the like button now. For those who are new to this channel, and if you want to encourage me, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. A quick disclaimer, I am not a licensed financial advisor. The content in this video is for entertainment and education purpose only and should not be considered financial advice. In this video, I simply showing you what I may be doing. Please conduct your own independent research and consult a professional if needed before you commit to an investment. Never invest more than you are willing to lose, and always be sure to read the fine print and the terms and condition before you commit to an investment. Okay, so with this, we are ready to kickstart today's discussion. Like I mentioned earlier on, okay, I actually have discussed on the action plan by asset class of shares and also bond. Okay, so now I will actually kickstart the discussion on the cash and also the saving. Okay, so for the cash and saving, they are probably the biggest loser. Okay, so when Fed actually cut the interest rate. Okay, so this probably will be the most direct impact, okay, on your cash holding. Okay, because the interest that you used to earn, okay, on the high yield saving account, they actually will drop very quickly. This is because once Fed cut the interest rate, banks will also cut your saving account interest rate also. So what will be the action? So don't hop into excessive cash, but it is always wise to have an emergency fund. But however, when you actually let this large amount of cash sit idle doing nothing, this become very costly in a low rate environment. Okay, so this is actually what central banks go. They actually want you to spend or at least invest that money. Okay, so basically, like I mentioned earlier on, cash probably is the biggest loser. Okay, the interest that you used to earn on saving account, okay, they will reduce because Fed cut the interest rate. So therefore, holding too much cash means that your purchasing power will most likely eroding due to inflation. Okay, so when Fed cut the interest rate, US dollar will also weaken. Okay, so basically this is a very important concept. Okay, so this is something that we will discuss later on. Next, on crypto. Okay, so before I continue, crypto is actually considered a high risk, high return kind of investment. So therefore, I will not suggest any move on crypto because I probably need a little bit more time to explain onto the investment on crypto. So therefore, I don't want to conclude on any move on crypto. Okay, so coming to this crypto investment portfolio, okay, so crypto, particularly Bitcoin, they are actually very sensitive to this microeconomic shift. Okay, so basically this is how it actually benefit. So first benefit will be the liquidity injection. Okay, so what happened here is basically when Fed cut the interest rate, okay, the overall money supply and the liquidity in the financial system will also increase. Okay, so this excessive liquidity often find its way into crypto market, pushing price up. So when Fed actually cut the interest rate, okay, so you can imagine that people tends to borrow more. So when they actually borrow more, where they will go, okay, for example, they may go to share. And nowadays, because youngsters actually quite enjoy invest onto crypto. So for some youngster, they actually like to invest into crypto. So therefore, okay, we actually has a higher liquidity injection into crypto investment. Crypto as risk on. Okay, so crypto is always perceived as a high risk, high gain asset class. Okay, so therefore, in a risk on environment, okay, it become a prime destination for capital seeking significant growth. So when Fed actually cut the interest rate, okay, so you definitely need to take on more risk. And crypto being high risk and also high reward, this is actually very encouraging. However, you need to understand the full risk when you actually invest onto crypto. Next, on the weakening dollar. So as I mentioned earlier on, when Fed actually cut the interest rate, this will weaken the US dollar. Since many cryptocurrency are priced in dollar, so therefore a weakened dollar, they can actually make them cheaper. Like for me, as an international investor to buy and also increase the demand. There are actually two forms of investment. Okay, for example, as I mentioned, I'm actually based in Singapore. So therefore, when Fed actually cut the interest rate, US dollar will weaken. So I will enjoy the first form of so-called investment because I changed Singapore dollar to US dollar. Then I will have some form of gain. Then next will be on my investment onto crypto. Okay, so basically this is the consequence. Okay, when Fed actually cut the interest rate, the US dollar weakened. So as an international investor, for me, like in Singapore, the money typically will be quite strong. So therefore, I will be able to enjoy the benefit. Next will be on the improved sentimental. Okay, so basically the rate cut are often implemented to simulate a struggling economy. Okay, so basically this can boost overall investor confidence, which positively impact speculative asset like crypto. Okay, so basically all this make crypto so-called gain when actually Fed cut the interest rate. Next will be on real estate. Okay, so real estate, there will be two forms. One is the REITs, one is actually the physical property, okay, which means a home. I actually buy a home. Okay, so this is in fact the major beneficial. Okay, so basically this actually enjoy a lot of benefit when Fed actually cut the interest rate. Why? Okay, because when Fed cut the interest rate, I'm going to have a lower mortgage rate, and this actually make the home more affordable, and therefore they actually boost the housing market. Okay, so which means that when Fed cut the interest rate, your mortgage rate also reduce. When the mortgage rate reduce, this means that more of us actually will consider to invest onto a real property. Okay, so basically this is on the physical property. Next, on the risk. Okay, so risk also benefit because risk company actually they borrow money to expand their property. So therefore, with lower mortgage rate, they actually will benefit, or maybe they even can consider to refinance their previous so-called mortgage rate. So therefore, for REITs, they are actually attractive, okay, for their yield when Fed actually cut the interest rate. Next will be on the other asset. Okay, so gold. Okay, gold, when we actually invest into gold, they actually don't pay any interest rate. Okay, so however, for this time round, when Fed cut the interest rate, this become more attractive. Why? Since gold don't have any interest rate, so when Fed actually cut the interest rate, which means that the benefit of invest, okay, will be quite nearer to gold since the interest rate is cut. So therefore, okay, the opportunity cost of holding can actually decrease. Okay, so this is the interest that you actually give out by not holding a saving account. Okay, so therefore, okay, what happened here is basically when Fed cut the interest rate, the interest rate actually reduced. So therefore, you may consider to invest onto another asset like gold. Okay, so it can actually act as a hedge against the currency weakness and also the market volatility that actually follow the rate cut. Okay, so what is your move on gold? Okay, so the gold often perform well in a low rate environment. Okay, because it does not pay any form of interest. When saving account and bond pay very little, the opportunity cost of holding gold diminish. It also sins as a hedge against a weakening dollar and future inflation. Next, okay, so on the key strategized principle to follow, first, don't panic or make drastic change. Okay, so this is very important. You must have a plan. Okay, so most important, don't FOMO. A rate cut, okay, is a market event that should be factored into a long-term strategize and not a reason to abandon it. Which means that, for example, when Fed actually cut the interest rate, it doesn't mean that you completely withdraw from investment. Okay, so you must in fact do more sensible investment in order to make substantial profit. Next will be revisit your asset allocation. Okay, so is your portfolio still aligned with your goal? Okay, remember, okay, when we actually do some form of investment, there are actually three types of so-called important thing that we want to achieve based on your so-called your appetites. For example, okay, we need to know what will be your investment goal. Okay, so what will be form of the risk that you can tolerate, and also will it be a short-term or long-term investment? So therefore, you need to understand your portfolio, okay, in order to see whether are they still aligned to the goal that you actually want. Okay, so a rising market for both stock and bond might have made your portfolio riskier than you actually intend. So therefore, you probably need to rebalance. Next will be diversify, diversify, diversify. In short, from here you can see that always diversify your risk. A well-diversified portfolio across different asset classes and the so-called geographies is the best defense against any single economic policy change. Okay, so basically this is always very important, and I always emphasize how to diversify your risk. So the moment that you can actually diversify your risk, then you will not be affected by a single event. For example, now when Fed actually cut the interest rate, you need to know the consequence so that you can diversify your risk. Consider reflection reflection trades. Rate cut are often means to reflect the economics. This can be good for asset like small cap stocks, industry communities, and emerging market, which are more sensitive to global growth. Okay, so basically these are the key strategies that you need to follow. Next will be a simple checklist. Okay, so most important is always review your stock portfolio. Am I overweight in certain sector that may suffer? For example, bank, they probably may so-called a mixed bag. Okay, they may be good, they may be bad when actually Fed cut the interest rate. Okay, so therefore, should I or should we consider adding to more growth-oriented sectors? Next will be check my bond funds. Have they so-called appreciate? Okay, so if they have already appreciate, it is time to take some profit and rebalance it. So this is also very important. Next will be assess your cash. Do I have too much sitting into the saving, earning a very low yields now because Fed capped the interest rate? Should I redeploy some of them into my investment plan? So everybody will be different. So most important, don't put your cash idling. You should do some form of investment. Understand the risk and put them according to the types of risk that you actually want to. Next will be re-evaluate my real estate exposure. Does it make sense to add a risk funds for a diversified and yield? Okay, so most of the time when Fed actually cut the interest rate, risk actually benefit the most. So therefore, you can consider to switch some of your investment to risk. Last but not least, rebalance my overall portfolio, okay, back to my target asset allocation. Okay, so everybody has different so-called targeted asset allocation. So therefore, from time to time, for example, for this case here, when Fed cut the interest rate, you probably need to do some form of rebalance so that you have the same type of risk now, and also probably the same type of investment objective that you intend to set. With this, I'd like to end my discussion. Please help me to like this video and subscribe to this channel. Once again, thank you so much for strong support. I hope to see you guys soon. Bye for now. Thank you so much.